Hello, everyone, and welcome to this podcast. We're continuing our updates on the deliberations of the International Sustainability Standards Board, or the ISSB, on the proposals in the exposure draft of IFRS S1, the General Requirements for Disclosure of Sustainability Related Financial Information, or S1, and the exposure draft of IFRS S2, the Climate Related Disclosures, or S2, with IFRS standing for International Financial Reporting Standards. So in today's session, our intention is to share an update of the final deliberations that were held between December 2022 and February 2023 in relation to the comments raised in the comment letters that the global EY organization, that we will refer to as EY, submitted to the ISSB in July 2022. The ISSB expects to finalize S1 and S2 in June 2023. By visiting ey.com/IFRS, you can access the EY comment letters, but also listen to the other podcasts of this series that the EY Global Corporate Reporting Services team previously recorded. So these previous podcasts provide an overview of the comments raised by EY to the ISSB on its exposure drafts on S1 and S2, as well as the first phase of the ISSB subsequent deliberations on its proposals that were held up to and including November 2022. We're recording this podcast in February 2023. I'm Katarina Vadzaki. I'm a senior manager in EY Global Corporate Reporting Services at EY GS based in London, and I am part of the sustainability reporting team. I'm joined today by my colleague Rebecca Wilkinson-Blank, who is also a senior manager in EY Global Corporate Reporting Services at EY GS based in London. She's part of the sustainability reporting team and previously worked in EY Climate Change and Sustainability Services. Both Rebecca and I were involved in the comment letter process.
Thanks, Katarina. And just as a reminder, it might be helpful to point out that overall, respondents, including EY, expressed strong support for the majority of proposals contained within the exposure drafts. So to kick off today's discussion on S1, in a previous podcast, Katarina, you mentioned that the ISSB decided to remove the term enterprise value from the objective of S1 and from the assessment of materiality, and that this decision was largely driven by feedback raised by respondents, including EY. Has the ISSB discussed this further at all?
Yes, Rebecca. So while the ISSB decided to remove the term enterprise value, it believed that an anchor, as they characterized it, is still needed to facilitate the application of materiality in the context of sustainability-related disclosures, since the term enterprise value did not really achieve that. So the recent discussions emphasize that S1 is focusing on the provision of information that is useful and relevant to the primary users. Disclosures about how an entity's value is created, preserved, or eroded can be very broad. So the intention of S1 is to focus the scope of those disclosures to only those that would be of interest to primary users. So this means to provide disclosures mainly for activities that over time ultimately affect the entity's performance or prospects. Also to focus on activities that influence the entity's business model or strategy and create or erode its value from the user's perspective.
Okay. And I guess that's why it's also important to have a clear articulation of broader concept of value that underpins the focus of the objective in S1.
Yes, exactly.
Okay. So were there any specific decisions made about the concept of value?
Yes, there were decisions made. So in the context of making a clear articulation of value, the ISSB pointed out that the term sustainability, as they use it in S1, is intentionally broad so as to reflect the fact that the information about sustainability-related risks and opportunities is subject to change over time. Also, the drivers of an entity's value will vary significantly depending on the underlying nature and nuances of an entity's business model and business activities. So the ISSB agreed that providing a clearer description of the notion of sustainability would be preferable than providing a definition. So this description explains how the value that an entity creates, preserves, or erodes for itself and for its primary users is inextricably linked to the value it creates for other stakeholders, the society, and the natural environment. Probably it's quite important to mention here that the ISSB based its articulation of value on a kind of similar concepts that were used in integrated reporting framework and the proposed updated practice statement 1, the management commentary, so as to to better align with these projects.
Okay, thanks for that summary, Katerina. I'm going to move on to another topic that the ISSB first discussed last October about the use of the term significant and the ISSB decision to remove this term. Was there any discussion on that in recent months?
Rebecca, as explained in its November meeting, the original intention of the ISSB was for an entity to use the term significant so as to identify those sustainability-related risks and opportunities that matter for the specific entity. This time, the ISSB came back to this topic so as to discuss and decide on the guidance that should be provided to help preparers in this identification process of sustainability-related risks and opportunities. So what I personally found as an important point in this discussion was the clarification of the interaction and relationship between identifying sustainability-related risks and opportunities and the materiality assessment. So in particular, it was clarified that the materiality assessment relates to the information about those sustainability-related risks and opportunities rather than the identification of those risks and opportunities in themselves.
Okay, and that sounds like an important point, but did the ISSB elaborate on how it intends to address this in S1?
Yeah, so the ISSB decided to amend the Illustrative Guidance in S1 so as to introduce a two-step process, as they called it, that essentially clarifies the distinction and connection between identifying sustainability-related risks and opportunities that an entity needs to provide information about and disclosing material information about those identified sustainability risks and opportunities. So this guidance will provide a description about what factors and inputs to consider when identifying sustainability-related risks and opportunities. Also, illustrative examples will be added to emphasize the types of risks and opportunities that an entity needs to provide information about. Also, what materiality judgments need to be made when identifying such information.
Okay, so it sounds like the illustrative guidance will be quite key in terms of providing additional clarity and information, which is something that EY also recommended in the comment letter. So Katerina, I remember a discussion from last November about S1 and the list of proposed sources of guidance that an entity could refer to when identifying sustainability-related risks and opportunities. I understand that this list of sources will be available to entities in instances where there is no IFRS sustainability disclosure standard for a specific topic, but has the ISSB discussed any other changes?
So, Rebecca, with this list of sources, the ISSB intends to help entities to save time and effort, as they will not have to review the numerous sustainability standards and frameworks. However, this list was interpreted by some entities as a requirement to consider all of the available sources. So when the ISSB discussed those sources last November, it decided that an entity shall consider, so that is to say, it is required to consider the Sustainability Accounting Standards Board, the SASB standards, whereas the Climate Disclosure Standards Board, the CDSB framework, as well as the technical application guidance for topics such as water and biodiversity may be considered. So following up with this discussion, in the recent meeting, the ISSB discussed some other sources that are listed in S1 and decided that the source relating to the most recent pronouncements of other standard setting bodies whose requirements are designed to meet the needs of users of general purpose financial reporting may be considered. Also, what may be considered is information from entities that operate in the same industries or geographies. So this may consider means that entities have the option of considering those sources rather than being required to do so.
So, Katerina, does this mean that entities will be able to consider those sources both in the process of identifying sustainability related risk and opportunities, as well as in the process of identifying the material information that entities need to disclose?
Yeah, good question, Rebecca. So, yes, for these two sources, the consideration refers to both the identification of sustainability related risks and opportunities and the identification of disclosures about them. However, specifically for the Global Reporting Initiative, the GRI standards, and the European Sustainability Reporting Standards, the ESRS, the ISSB decided to list them in an appendix and allow the consideration of those materials. Preparers may then consider those only for the identification of metrics or other information for disclosure once they have identified the sustainability related risks and opportunities. But note that although the ISSB allows these to be considered, this will be subject to the fact that such a consideration does not obscure the information that is material to primary uses of general purpose financial reporting.
I see. Thanks for expanding on that. So, moving on to another area of interest, the ISSB has been quite focused on the requirements related to the disclosures about current and anticipated effects of sustainability related risks and opportunities on the financial statements, as well as the connectivity between them. This issue was raised last November during the ISSB discussions, but I don't believe at that time any specific decisions were made. Is that right?
Yeah, indeed, Rebecca. So this is an area of high interest, and as you described it, when the ISSB discussed this last November, the discussion was based on specific examples. So these examples illustrated what information should be provided to enable users to assess the connections among sustainability-related risks and opportunities, but also their connection with the information in the general purpose financial reporting. The ISSB followed up with this topic in January, and it was good really to see that the decisions made in this meeting address some of the concerns raised by EY in its common letter. For example, requiring explanations of how sustainability related risks and opportunities are connected with the information in the financial statements, or using cross-references to avoid unnecessary duplication of information subject to specified conditions, and also allowing an entity to limit the provision of information to qualitative only if it is unable to provide quantitative information. But of course, the entity should explain why it is unable to do so.
Okay, that's interesting. So before we switch to S2, is there anything else from the recent ISSB discussions that you think would be helpful for the audience to know?
Well, there were some additional decisions made on overarching topics. An important decision relates to the fact that several respondents, including EY, were quite concerned about how challenging it can be for entities to apply disclosure requirements that involve a high level of outcome or measurement uncertainty, especially where forward-looking information is disclosed. So to address this concern, the ISSB decided to introduce the concept of reasonable and supportable information that is available at the reporting date without undue cost or effort. However, the intention is not to use this concept as a broad principle, of course, but only in specific circumstances. Another interesting discussion was about disclosing confidential or commercially sensitive information and whether there could be an exemption that would probably allow preparers to omit such information. So the ISSB decided to introduce such an exemption about commercially sensitive disclosures on sustainability related opportunities, which can only be used in limited circumstances and provided that it does not relate to information that is already publicly available.
Okay, thanks for that, Katerina. And the points you just raised transition us nicely into the discussion regarding the proposed climate-related disclosures, otherwise known as S2. So as you mentioned, the ISSB introduced the concept of reasonable and supportable information that is available at the reporting date without undue cost or effort. And as you said, this was in response to concerns that respondents raised, including EY, regarding requirements that involve a high level of outcome or measurement uncertainty. So in terms of S2, this concept is intended to help entities apply a number of specific requirements. For example, when entities are identifying climate-related risks and opportunities, when they're applying requirements that relate to their value chain, so for example, the measurement of Scope 3 greenhouse gas emissions, or GHGs, and when entities are applying climate-related scenario analysis. And maybe just picking up on that last point regarding scenario analysis, the ISSB also decided that when it comes to selecting a method of climate-related scenario analysis, entities should really take into consideration two key elements. So the first, that entities consider the degree to which they are exposed to climate-related risks and opportunities. And second, that entities consider the available skills, capabilities, and resources that they have for conducting scenario analysis.
So, Rebecca, I guess these additional considerations also align with the comments that EY raised in the comment letter. Is that right?
Yes, yeah, that's right. So in the comment letter, EY essentially acknowledged the fact that some sectors and industries will be more affected by climate change than others, and that the capacity for carrying out scenario analysis will also therefore vary. As such, EY suggested that the ISSB consider including additional examples as illustrative guidance in order to help entities apply the requirements. So, for example, EY, along with a number of other respondents, pointed to existing guidance that has been developed by the Task Force on Climate-Related Financial Disclosures, or TCFD, as a useful tool to help entities. And in response to this feedback, the ISSB has since emphasized that it will be developing additional guidance on scenario analysis and that it will specifically build on the existing TCFD guidance.
Great, thanks for expanding on that, Rebecca. So reflecting on the feedback that EY provided to the ISSB related to S2, Were there any other key decisions that the ISSB made in recent months?
So many, where to start. Yeah, there have been a number of key decisions made regarding S2, and perhaps I'll start with GHG emissions, and in particular Scope 3 GHGs, which relate to the indirect emissions that occur in the value chain. So an important development that came out of recent ISSB discussions is the introduction of a framework for measuring Scope 3 emissions. And this framework will essentially outline criteria to help entities prioritize what information and data it should use. So, for example, prioritizing the use of data based on direct measurement, as well as primary data from activities within an entity's value chain, followed by data that's been verified, etc. So the proposed framework will be part of application guidance, and as we discussed earlier, the intent is that entities will also apply the concept of reasonable and supportable information that is available to the entity without undue cost or effort.
That sounds really helpful. And I think the ISSB has also decided to introduce a requirement for the disclosure of information that would enable users to understand how an entity has measured its Scope 3 GHG emissions. What kind of disclosure does this involve?
Yes, so the requirement that you're referring to is really about disclosing information on the inputs, assumptions, and estimation techniques that an entity uses to measure its GHG emissions, along with an explanation of why particular inputs, assumptions, and techniques are relevant to an entity's GHG emissions. And this is something that EY raised in the comment letter, citing the various choices that entities would need to make about different calculation methods and underlying assumptions, and how a requirement where entities would explain their overall approach to GHG measurement would indeed be quite beneficial to users.
Good, thanks, Rebecca. So I recall in November the ISSB discussed some transitional reliefs to help respondents' concerns. That is, specifically for Scope 3 GHG emissions, respondents, including EY, of course, decided challenges associated with data availability and data quality. So I know respondents overwhelmingly suggested that the ISSB should consider a phased-in approach to allow entities some more time to strengthen their internal process and the controls in order to collect the necessary data and improve the quality of disclosures. So were there any specific decisions that the ISSB made about this?
Well, the ISSB has essentially decided to introduce transitional reliefs, such as a temporary exemption from Scope 3 GHG disclosure requirements. Another relief is to allow an entity to measure its GHG emissions, so for Scopes 1, 2, and 3, using information for reporting periods that differs from its own reporting period. This temporary relief would be conditional on a few factors, such as the length of reporting periods being the same, so from period to period, and that the entity measures and discloses its GHG emissions using the most recent data available, and again, using this without undue cost or effort concept.
Yeah, makes sense. So probably building from what you've just covered, Rebecca, I'd like to expand on an additional transitional relief that the ISSB decided last November, and it's about permitting an entity to report its sustainability-related financial disclosures after issuing its related financial statements. So on this, the ISSB specified that the timing of the delay of reporting sustainability-related financial disclosures will depend on whether an entity provides an interim report or not. In particular, if an entity is required to provide an interim report, then the delay can be until the entity issues its interim report for the second quarter or half year. So, for example, you can consider an entity with an annual reporting period that ends on 31st of December 2024. and assume that it applies the transitional relief to report its 2024 annual sustainability related financial disclosures at the same time as its half-year interim report, which is required to issue. In that case, its sustainability-related financial disclosures will be reported by 30th of September 2025 at the latest. So also, if an entity voluntarily provides an interim report, a similar delay is allowed, but no later than 9 months after the end of its annual reporting period. So again, by the 30th of September 2025 in my example above. So also limiting the delay up to 9 months after the end of its annual reporting period is also will also be the case if the entity has no interim reporting at all.
Okay, thanks, Katerina. And with respect to the overall package of transitional reliefs provided, including the temporary exemption from Scope 3 GHG disclosures, I just want to point out that these reliefs will only be available to an entity in the first annual reporting period in which an entity applies S1 and S2.
Yeah, exactly. So the reliefs are only for 1 year. And just a final important point before we close is the fact that the ISSB in its final deliberations, they agreed that the effective date of S1 and S2 will be for annual reporting periods beginning on or after 1st of January 2024. So this means that the first disclosures will be provided in 2025. Of course, the actual time of application for S1 and S2 will depend on when its jurisdiction will decide to adopt them. The ISSB also agreed to permit early adoption, but only if S1 and S2 are applied at the same time. And of course, if an entity decides to early adopt, it will, of course, need to disclose that fact.
Okay, thanks for that, Katrina. So this brings us to the end of today's podcast, where we've highlighted some key elements from the ISSB deliberations on the exposure drafts S1 and S2, and how various decisions made relate to the EY comment letters. This also marks the end of the pre-issuance stage of S1 and S2, given that the ISSB has now completed its formal deliberations and intends to finalize S1 and S2 in a few months' time by June 2023. So once the standards are finalized, we'll be working to bring you additional podcasts and videos where we'll be speaking with EY colleagues from across the world to hear their thoughts and perspectives on how S1 and S2 are being applied. So with that, both Katerina and I would like to thank you for listening in, and we hope you have a great day. Bye for now.